There's so much misinformation being spread that it is out of control. What is really going on? The IRS is getting more money. This was in the Inflation Reduction Act. The IRS will receive approximately $80 billion to improve taxpayer compliance. Approximately $45 billion of that will be spent on auditing Americans. Right now, the IRS has about 80,000 employees. YouTubers are saying that the IRS is going to hire an army of 87,000 IRS agents to audit more Americans and double the size of the IRS workforce. No, that is not going to happen. So first of all, we are in a labor shortage. How are you going to hire 87,000 IRS agents just instantaneously? The Treasury Department says that 50,000 IRS employees will be eligible for retirement in the next 5 years. So you have to remember that this is a government job, and the IRS, when it's time to retire, people retire. The second thing that I want to point out is that not all of these new hires will be auditors. The third thing is that these are just projections, and most likely these projections are overstated. And I already see this coming. They are probably going to say that we couldn't meet our projections because we need more money. Now, the hiring schedule is 87,000 employees over the course of 10 years minus the employee leaves that will be retiring. Nevertheless, the IRS will indeed have a larger workforce and they will indeed have more auditors. However, it's not going to be like a new army of an additional 87,000 IRS agents. This brings us to the next issue. So these new auditors, who are they going to audit? Are they going to go after low-income Americans, middle-income Americans, rich people, corporations, big businesses, small businesses? What if the IRS does more of the same? The IRS says that in 2021, more than 50% of audits were conducted on Americans making under $75,000 a year. So this is coming straight from the IRS. This is a report on the Treasury Department's inequities in tax enforcement. Since 2010, audits on low-income Americans have fallen by 40%. However, audits on Americans making over $10 million have fallen by 65%. So they've been focusing more on low-income Americans. Why the IRS goes after low-income Americans? It's because they are easier targets. It's for two reasons primarily. The first one is that they don't have CPAs. They don't have tax attorneys to defend them. The second is that you need an experienced auditor that knows what they're doing. If you're going to fight against rich people and billion-dollar corporations, it's just so much easier to go audit someone that's making $75,000 a year. Now, here's the problem. The IRS is promising to give us $80 billion. And we are going to turn that into $204 billion over the course of 10 years. So the IRS needs to make that money, and they're gonna go after easier targets. They're gonna go after low-income Americans and the middle class. IRS agents cannot simply be assigned to global high-wealth partnerships or large and complex business transactions without the requisite skills, training, and experience to analyze returns that are highly complex. For large corporations, the average number of pages per tax filing is 6,000 pages long. But not only that, just imagine how complex this tax return is going to be. If you are a new auditor, it might as well be written in hieroglyphics, but you have to remember the IRS needs to make that money. And do you think you're gonna stand a better chance if you are a new auditor auditing this or auditing a Uber driver that makes $75,000 a year? But a lot of people are gonna say, the government promised that they are only going to be auditing people making over $400,000 a year. Does it say that in the bill? No, it does not. That's like walking into an $80 billion deal without a written contract. Let me ask you a question. Do you know who the Joint Committee on Taxation is? Let me introduce you. The Joint Committee on Taxation is a committee of the U.S. Congress established on the Internal Revenue Code 26 U.S.C. Section 8001. Founded in 1926, they prepared the official revenue estimates of all tax legislation passed by Congress. They estimated that 78% to 90% of all this new audit money, the $204 billion, will come from people making under $200,000 a year. Let me tell you, I say that the IRS is supposed to receive $80 billion and turn it into $204 billion, right? And this is going to lower inflation. But remember, the new IRS auditors can't just go after the rich people. Then you have to go after people that are not rich. But the IRS said they will not be targeting people making under $400,000 a year. So the IRS can't go after the rich, they are not capable of it. But they're going to make $204 billion and they're going to lower inflation. This is how I see it playing out. There are two options. The first option is the IRS cannot come up with that amount of money in that time frame by auditing the rich. So they're going to audit the middle class. That's where the money is going to be at the Joint Committee of Taxation expects that to happen. The other option is to go after the rich. Then the IRS would fall very short of that $204 billion. Then they're going to, in this option, they're going to waste a lot of taxpayer money. And this is going to add to inflation. So which scenario is going to pan out? So either one is going to result in a lie. And I'm hearing people say, it's gonna be okay if the IRS audits people making under $400,000 a year, because if you are an honest person, you do your taxes, then you're gonna have nothing to worry about. For those of you that don't know, let me tell you how an audit works when you are an innocent and honest person. A lot of honest and innocent Americans are not going to have the knowledge or the resources to prove they're innocent. If you think that the $204 billion will be coming from tax cheats from criminals and bad people, yes, some of it will, but a lot of money will be coming from innocent, law-abiding taxpayers that did nothing wrong. Let's say that you get audited and you prove your innocence, and the IRS doesn't get any money out of you. They are still going to scare you, they are going to intimidate you, and you are going to be stressing out for months. And if you are fortunate enough to afford to hire somebody to defend you, a tax attorney, a CPA, or whatnot, you are still going to blow money on those services and you don't get reimbursed for that. So the best case scenario if you get audited is the IRS. They're going to waste your time, you're going to lose some sleep over this, and you are going to lose some money defending yourself. Worst case scenario, you are innocent and you get bullied and they take your money, but the IRS is getting $45 billion to do this. And they're on a mission to collect one way or another. If you get audited, it's going to be a nightmare. Let's just say that you are self-employed and you went on a business conference out of state and you got a flight, you got a hotel, and you deducted it on your tax return. It was completely legitimated. When the auditor asks you to provide proof that it was legitimate, do you think that you can just show the receipts for your flight and the receipts for your hotel and then you think you're going to be good? No, that is not how it works. They are going to ask you for your itinerary. They are going to ask for brochures that you collected at the conference. They are going to ask for emails. They are going to ask you for other things to provide proof that it was legitimate. So your receipts, they are going to suffice. I mean, who saves an itinerary from 3 years ago? So this is what you are going to be dealing with. I hope those are helpful to you. Thank you for your support and goodbye.